Well, good morning from London and good evening from Australia, where we have Dr. Shan Turnbull joining us for this session on creating lifeboat money for the next financial crisis and eternally sustaining humanity. A small topic, I think we'll agree. You'll know me, I'm Mike Wardle, I'm Chief Executive here at ZN, and my job today is to moderate the session, get out of the way quite quickly so we can hear from Shan, and also to moderate the Q&A. The format's quite simple. After my introduction, we'll have a keynote presentation from Shan Turnbull, and there'll be a Q&A session after that. If you haven't used GoToWebinar before, the way to ask a question or make an observation is to find the question tab on the dashboard on your screen. You can type in your question, that'll come to us and we'll field that during the Q&A. And please do put a question in or an observation at any point during the presentation. You don't have to wait till we get to the Q&A session. We're recording the session today, so if there are any anything you want to go back and refresh yourself on, the recording will be available in about 24 hours and posted on our website. And of course, if you have friends and colleagues who you think would be interested in the presentation, we do invite you to share the recording with them as well. Just by a final bit of housekeeping, if you do put a question or observation in, we will pass on your contact details to Shan after the event. So if there's any need for further follow-up discussion, because things get very interesting, we can make that happen. So moving on to just first of all thank our sponsors. We are very lucky at the FS Club to have a range of sponsors who support our work and enable us to range far and wide in our webinar series. We really are grateful for their support. So our speaker today, Dr. Shan Turnbull, is the founding principal of the International Institute for Self-Governance, based in Sydney, a founding life fellow of the Australian Institute of Company Directors. He has an MBA from Harvard, has been an entrepreneur, and is a prolific author on issues relating to governance and self-governance, indeed. His 2001 PhD created a methodology to establish the science of governance on any species and introduced the self-governing concept of tensegrity. I knew I'd stumble over that word. I do apologize, Shan. And so Shan is going to be giving his presentation, but before he does, we've got a couple of poll questions we'd like to ask of you. So just a couple of things just to get a gauge of the audience, how you think are going on. So the first poll is who should advise and or manage central bank conflicts of interest? So who should have that role? Please do click on your results. We're just seeing the results coming in now. And we'll end the poll now. So the results are in. A tie between central banks themselves managing conflicts of interest and parliamentary committees, with Treasury officials, government and special purpose inquiries also getting mentions, but in this audience at least, that's the view. We've got a second poll, just again to start to engage you in the subject. Should Parliament allow private tests of self-liquidating digital Great Depression money in case official money stops? Getting your votes in now. Just give another couple of seconds. And there we have it, the results. Yes is the overwhelming answer. 80% of those in this audience, at least, say yes, we should. So Shan, that's a view of where the audience is sitting. Over to you. We're really looking forward to your thoughts and presentation.
Well, thank you, Mike. I'm talking about lifeboat money as the name I'm using to describe stamped script that was privately widely issued in the Great Depression. This was because the official money system had failed. Digitization substantially improves the efficacy of lifeboat money. Without any depression, lifeboat money again became privately issued in Europe this century. It is in a hybrid paper-digital form. To ensure the survival of business and the economy in another financial crisis or pandemic lockdown, Parliament should encourage the introduction of lifeboat money as soon as possible. But far more importantly, Lifeboat money should underwrite the survival of humanity by stopping climate change. In 2006, Lord Stern reported to the UK Parliament that climate change was the greatest market failure the world has ever seen. Stern made 4 key recommendations. They included emission trading, but none of his suggestions would stop market failure. 2 years ago, this led the Secretary General of the United Nations to state, "We're on a highway to climate hell, with our foot still on the accelerator." Carbon taxing and/or trading, even if they could work, is like trying to run up an escalator that is taking us all down to a climate hell. The world is sleepwalking into what scientists inform us is a ghastly future. So why have markets failed? It is because modern money cannot be defined in any physical way. It is unbelievable, but accountants have not established any standard for economic value. Some years ago, I asked the chair of the International Accounting Standards Board, why not? He replied, it was too hard. Economic value has become an undefinable, dysfunctional social construct. It has become a modern mystic totem, but one not fit for purpose for sustaining humanity. Traditional Indigenous Australians possessed hundreds of languages to describe how to maintain their well-being in hundreds of bioregions, but they had no word to describe economic value. This is because it was not relevant to either their well-being or future survival. This is consistent with 30 years of research by Elinor Ostrom. In a 2009 Nobel Prize lecture, she described how to solve complex economic problems without market or state. This solution depended upon introducing distributed decision-making. Ostrom described this as polycentric self-governance. I'm not aware of any graduate school of business, management, or government that provides an education in polycentric self-governance. As a result, all their graduates are being educated how to undermine democracy with ever more effective dictatorships. There are 3 options for avoiding or reversing market failure. The first is to remove the need for markets as identified by Ostrom. You may think that this would be impossible, but it's illustrated today by Olympic sporting organizations. They demonstrate polycentric self-governance from the local self-governing clubs to a global level of a self-governing Olympic Committee without necessarily using markets or state. The second option is to simplify the role of money, so it's only a medium of exchange as proposed by Keynes. This type of lifeboat money was widely privately issued in the Great Depression. It could not be used as a store of value because it had a negative interest rate. This funded its redemption to make it self-liquidating medium of exchange. Neither was it a unit of account, as it was tethered to official money. The third option is to tether lifeboat money to an index of eternal well-being in each bioregion of the planet. The exchange rates between each bioregion of this form of ecological money would then determine by how well market failure was being reversed. It would act in a similar way to a border tax on imports from less sustainable regions, as suggested by Martin Wolf in his latest book. An internal memorial for central banking would be for them to issue ecological digital lifeboat money. It would immediately provide financial stability and resiliency. Central banks could then be phased out by private bioregional issuers. This would also be a memorial for Mervyn King. He stated in 1999, societies have managed without central banks in the past. They may well do so again in the future. King asked, will future historians look back on central banks as a phenomenon largely of the 20th century? King explained how digital technology could make central banks unnecessary. He stated, the successors to Bill Gates would have put the successors of Alan Greenspan out of business. If the Bank of England is too conflicted to experiment with ecological central bank digital currency, then Parliament should authorise financial sandboxes for the private sector to introduce this digital innovation as soon as possible. The take-home message is that official money is not fit for purpose, as noted by Keynes in 1923. Some of the more important reasons are because A, it's created market failure and climate change. B, It magnifies inequality by earning interest. C, cannot provide price stability as its value is not definable or tethered. And D, it's too complicated because it's used to undertake functions not required by a medium exchange to avoid the inconvenience of barter. It may already be legally possible to privately issue lifeboat money. It has been issued again in Germany since 2003. It was initially introduced in Germany by hundreds of stores in the 1920s, like modern fly-by-point systems to promote sales. Its first use as a financial lifeboat was to resuscitate a Bavarian coal mine in 1931. Notes issued were redeemed by delivery of coal. The first recorded use by a non-profit organization was in the Austrian town of Vogel in 1932. Model legislation for the government issue is set out in the appendix of the 1933 Irving Fisher book on stamp script. It describes the Bankhead Pettinger Bill introduced into Congress 2 weeks before President Roosevelt took office in March the 4th, 1933. The Federal Reserve had failed. Private banks were closing. The bill authorized the government to issue $1 billion in single dollar notes. The notes were only valid if a 2-cent postage stamp was affixed to the back of each note each week until it was redeemed after 52 weeks. The notes would be given away to citizens to provide welfare and used by state governments to create employment by building infrastructure. The US Post Office would redeem the notes from revenues generated by the sale of stamps. This would yield a profit of at least $40 million. It could be greater if notes were lost or not or updated. This is why lifeboat money can be issued by any credible organization. Roosevelt closed all the remaining banks on March 6. On March 9th, Roosevelt convened an emergency meeting of both the House of Representatives and the Senate. Congressman Henry Stegall did not have time to put a bill to avoid the stamp script bill making the Federal Reserve extinct. So he read out aloud the first New Deal bill for the Federal Reserve to survive, a second time in 2 years. The president signed it into law without discussion the same day. As a result, the US government has become trapped in ever more borrowing, while at the same time having to support the Fed a third time in the 2008 financial crisis. If users spent their lifeboat money daily, the cost to citizens is 2 cents divided by the 7 days. This is less than 0.3%, less than a credit card commission. Lifeboat money was typically issued by city authorities. Here is a slide showing both sides of a note given away by the city of Traverse City, Michigan. The back side of the note shows the 2-cent stamps affixed each week. Hundreds of cities in North America and in Europe issued lifeboat money. Vogel became the first town to redeem notes in cash. Across the Austrian northern border, there is the Schimmergau region of southern Germany. This is where the Schimmergau lifeboat money was reintroduced in 2003 by Christian Jettier. Other German regions were also introducing regional currencies. This led to the inaugural meeting of the Association of Regional Currencies held in the Trondheim Town Hall in 2006. I was delighted to be the guest speaker and become acquainted with Christian and his regio currency colleagues. There are many ways lifeboat money could be introduced. Large supermarket chains and others issuing electronic-based customer incentives. The London Transit Authority could create an Oyster card variant that could function as a universal bearer note debit card. In 1934, lifeboat money was established in Switzerland called the Wehr. Like stamp script systems, it was, and still is, tethered to the national currency, the Swiss franc. But unlike other issuers of stamp script, it was a closed, cooperative system that shared interest-free credit creation amongst approved members. It began with 16 members, and the co-op obtained a banking license in 1936. It now has 50,000 small and medium-sized businesses as members. In 1948, the practice of using a negative interest rate was terminated. Like the US-based International Reciprocal Trade Association, the Wehr represents a supplementary currency that James Stoddard suggested could improve macroeconomic resiliency. These examples raise the possibility of establishing an ecologically based official supplementary currency in the UK or elsewhere. This would introduce a choice in currency as promoted by Hayek. It would also establish financial lifeboats in the event of a monetary or pandemic crisis. Crucially, it would create a basis for weaning economies of crypto and official currencies that together exacerbating market failure. An important next step would be to establish an internal ecological tether. The need for a monetary tether has been raised by two governors of the Bank of England. In 1999, Mervyn King suggested a commodity standard that would produce broad stability in the price level. In 2019, Mark Carney stated, "It is an open question whether such a synthetic hegemonic currency would be best provided by the public sector." When the Bank of England and the UK Treasury invited the public to make submissions in 2020 on central bank digital currencies, I submitted that without a stable unit of value, a central bank digital currency becomes flawed. However, no mention of a tether was made in subsequent discussion papers. This led me to organise a roundtable webinar hosted, moderated and recorded by Alderman Professor Michael Minnelli. Its speakers included two former members of the Bank of England Monetary Committee. They are Professors Charles Goodhart and William Vertier. In 1983, Goodhart was an advisor to the Hong Kong Monetary Authority on tethering its currency to the US dollar. The need for monetary tether generally was identified by the Economist newspaper in 1986 when it lightheartedly introduced its Big Mac Index. It has maintained it because it provides a way to compare the different purchasing power of national currencies. In January 1990, the Economist cover story announced the need to tether currencies. A tether provides competitive advantages for cryptocurrencies. These are explained on the webpage of the Tether cryptocurrency. But tethers to an unstable official funny money that is also an undefinable totemic unit of exchange is even more dysfunctional. An independently established human wellbeing index would introduce a less costly, more resilient, decentralized banking that could be offered by cryptocurrencies. Cryptocurrencies exacerbate climate change with the excessive energy consumption to run their blockchains. Bioregional cryptocurrencies would be denied economies of scale and subject to lean, mean, non-profit competitors. Simplifying money introduces a more resilient and self-reliant decentralized banking system. Central banking is but a specialized form of central planning. We know this does not work. An overlooked reason is that it introduces inefficient resource allocation. The cost could be much more than the misallocations produced by tariffs and taxes. Consider a mind experiment. Assume that demand for foreign exchange earnings in any region is in proportion to its population. Western Australia possesses 10% of the Australian population, but it earns 70% of Australians' forex. This means Western citizens earn 6 times the forex that they need. Eastern citizens would only earn 30% of the forex they needed. If each region possessed its own currency, then the value of the Western dollars would be much higher than the Eastern dollars. In the East, manufacturing and the export of educational tourism services would be invigorated. Local solar cell production would become more competitive. My second take-home message is that central banking is not fit for purpose for eternally sustaining humanity. A composite well-being index is required for each bioregion to create efficient, eternal, circular economies. Human well-being includes biodiversity. The OECD is already publishing metrics of human well-being for each member nation. This provides a rigorous basis for establishing bioregional metrics. The metrics will determine the exchange rate between bioregions that could then self-determine how they maintain their population level for eternity. In this way, modern society could be governed mainly by the nature of their local, eternal, renewable resources. It explains why modern society requires a total reset to replace its toxic top-down hierarchies with bottom-up stakeholder governance like traditional Indigenous Australians. Bottom-up polycentric self-governance is also demonstrated in the communication and control circuits of living things. This includes the human brain that has no chief executive neuron. Modern human society is the only species on our planet that is dominated by toxic dictatorships. These are now threatening us with extinction one way or another. Let's consider just one element of the composite wellbeing index, such as the reliance on a bioregional on renewable energy. The greater the reliance on renewable energy, then the higher will become the monetary tether relative to other regions. The PowerPoint chart, the reliance of 11 nations on various sources of energy. Eternal renewable energy is indicated by adding the blue and green lines. Their percentages then indicate the relative values of their currencies. This creates market forces for each region to improve its sustainability. A powerful incentive is also created to self-determine an eternal viable population for each bioregion according to its natural endowments. It was this vision that a charity funded a sustainable money working group in 2011. The picture shows the inaugural public meeting hosted in the Great Hall of the Institute of Chartered Accountants in England and Wales. From left to right, there is the chairman, Ed Mayo, Secretary General of Co-ops UK. They had 10 million voting citizens as members. Next is Steve Hughes, an economist from the British Chambers of Commerce. At that time, their members employed 5.5 million voters. In the middle was the late Professor Dr. Margaret Kennedy, a philanthropist, who funded the Regio currencies in Germany. Next is Tony Greenman, then head of finance and business at the London-based New Economics Foundation. On the far right is Sarah Gunnarsson, manager of sustainability, representing 140,000 chartered accountants. The next picture shows from left to right Maxim Pewty, economic advisor of the Forty Foundation, John Longworth, Director General of the British Chamber of Commerce, Ulrich Riefenjack, Secretary of the Forty Foundation, who sponsored the Sustainable Money Working Group initiative, then myself from Australia, Josh Ryan-Cohen from the New Economics Foundation, and Ed Mayo from Co-ops UK. John Longworth joined the Sustainable Money Working Group with a pragmatic, robust viewpoint. With the 2008 financial crisis still fresh in the 2011 memories, Longworth took the political view that even if a private issue of lifeboat money was not technically lawful, that any government of the day would accept it. I'd like to invite our audience to provide advice on this point. If flyby points and store credits are legal, why not also lifeboat money? How can we progress the adoption of lifeboat money? Some options are to consider are, first, the UK Parliamentary Treasury Committee to manage the Bank of England existential conflicts of interest arising from digital central bank lifeboat money. Second, the UK Treasury could invite local governments and private organisations to experiment in issuing lifeboat money tethered to official currencies. This would provide the public with familiarisation and education. Thirdly, the Chamber of Commerce and others to educate the public about lifeboat money. Fourth, the UK Treasury and or others to initiate discussions on the composition of a sustainable wellbeing index. Fifth, climate activists could fund the creation of a wellbeing index. Once established, like the Big Mac Index, it could introduce politically compelling positive policies to stop market failure. My many thanks to Mike Wardle, his YZN support colleagues, the financial service clubs, and all their sponsors. Thank you very much.
Well, thank you very much, Shan. Fascinating run through the concept of lifeboat money. A question, I guess, that strikes me is where local government sits in this. I think in your last slide you mentioned local governments, and certainly I know there are experiments in local digital currencies. For example, in Busan in South Korea, I know that the local government is sponsoring a local currency which you can only spend in the local area. How far do you think local government could take on some of this if we get the legal framework right?
Well, I don't think there's any particular limit. The Brazilian central bank has also organised local currencies, so it's sort of self-help facilitating. So I think there could be great opportunities for doing that. It's just a matter of being brave and robust and precocious enough to think about it.
And I'm interested in some of the experience from Switzerland and Germany, because what you're asking to do is asking members of the public to effectively working in several different currencies at the same time, because they need sort of official currencies for doing certain things and local currencies for doing others. How does that work in practice?
The quick answer is I don't know, and that's why you've got to experiment. This is why you need sandpits, to experiment and see how people get on with it. I mean, I've been traveling to Europe for a number of years, and I always carried, before the euro, I had to carry a number of different currencies. And it was a nuisance, but I coped.
Yeah,
But if you're living in one place and not moving around every few days, I think it'll be much more manageable.
sure.
But I don't know, you've got to experiment.
I think from what I know in Germany, quite a lot of business-to-business transactions are transacted in local currencies, and that certainly is another model we could look at in terms of how business-to-business transactions happen. A question, I guess, around the concept of polycentric self-governance. You described very well the kind of the sports model from local club up to international organisations. Have you any thoughts about how we might develop polycentric self-governance? What do we need to put in place to make some of those things possible?
That's my favorite question. Thank you very much. The answer is a counterintuitive tax incentive. And the tax incentive is for the investors, the shareholders, to change corporate constitutions to create a new class of stakeholder shares. And the stakeholder shares would be funded by book entry inside the company. Each year, a small fraction of the investors' equity would be transferred to stakeholder shares. And tied to this, the stakeholder shares will then be distributed to the main stakeholders and also to replace welfare. So you'd build up a universal dividend like they have in Alaska. But part of changing the corporate constitution is also introducing polycentric governance. And the condition is that and that means each stakeholder constituency would elect its own board to represent their own interest, to be independent of management. The most important innovation is to get away from the unitary board where directors are like setting and marking their own exam paper, because you've got a single board. Each director, that the board has absolute power to identify and manage their conflicts of interest, to absolutely corrupt themselves, the business and society. And we all know the solution to absolute power is the division of power. And there's no commercial reason why directors should have the power to manage the business, at the same time manage the corporate body to which they are accountable. So you need a separation of powers as a first step to create polycentric governance. And then the governance board is elected independently. It's not like the European Supervisory Board, because the shareholders elect both boards. They elect the management board on the usual plutocratic way of one vote per share. The governance board doesn't have management responsibility, so it gets elected on a democratic one vote per investor. So you can overrule major shareholders on ethics and power. And the governance board would take advice on setting the key performance indicators of management from the stakeholder boards. And the stakeholder boards, because they are elected independently, they represent constitutionally independent competing interests. They're all competing against each other, just like in our brains, where I said in the talk, we have no chief executive neuron. Different parts of our brains make different decisions for different purposes according to our internal needs and drives and external risks and opportunities, where we're both competing and cooperating together. And we build that in to the corporate sector to make corporations a common good resource to reversing the poisoning of the planet. Does that answer your question?
I think that starts to answer the question, indeed. And I was reflecting
you do another session more.
I was reflecting on also employee share ownership models.
Yes, it extends the external employee ownership model, but but employee ownership only have about 5% of voting citizens in democracies. Where I'm talking about 100%. I'm talking about compelling political incentives for the parliamentarians, because they're giving benefits to the shareholders who get a tax deduction, so they get a bigger, quicker profit. The institutional investors would be legally obliged to change corporate constitutions because they're getting a bigger, quicker profit. At the same time, they're giving all their other voters a bit of the action. So you're introducing universal capitalism to replace welfare and pension funds.
Thank you very much. Hans Hoyer has made a comment and a question. First of all, he thanks you for the ride and wonders whether if you see a dual economy as one sector serving what everyone needs, wouldn't it make sense to serve the first sector with a dividend and the second with orthodox money? So you've got one sector serving what everyone needs and then the rest. So you have a minus here and a plus there. The increased diversity in money would possibly associate with greater resilience to crisis. Any thoughts?
Well, it sounds interesting because I'm always interested in diversity and decentralization, but the devil's always in the detail. Anyway, I think it's worth developing.
Yeah, and I think the key concept there is the idea that you use one currency for the things we actually need, and the second is for other things. Simone Kikiraku has asked whether you think there'd be more appetite for creating a lifeboat currency from scratch rather than regulating crypto and making this an alternative lifeboat currency. So are we talking about starting from scratch with this?
I'm not too sure I understand the word starting from scratch. I was suggesting sandpits to experiment in. I mean, there's plenty of models you can do. There's a lot of alternative currencies about. It's just a matter of testing and trying what works. It's like flyby points. I mean, it all started with these hundreds of German stores where they were given, if they bought, they got these discount coupons. But if they didn't spend the coupons, they went out of date. And so they had to update them, and you got the negative interest rate introduced. So these things sort of evolved over time. And so there's plenty of examples and experience in the Great Depression of how to do it. I mean, look what happened. The Vogue was in 1932. And in 1933, there were hundreds of people issuing this stuff, or in Europe, throughout the North American and through Europe. It's not hard to do. In paper form, that is, and when you've got to lick stamps and put stamps on it, but people would write apps very quickly.
I was going to say the digital world would respond immediately to such.
Of course, I don't think it would be hard to do it. And during the pandemic, the state of New South Wales gave away money, or when the national government, we had JobKeeper programs where we just gave away money to keep people in food and lodgings. But that is taxpayers' money. What I'm suggesting is you have to use it or lose it money, the lifeboat money. You wouldn't create a debt. It's a crazy system we've got that of borrowing money to give it away. Why not just the government replace the banking system?
Mm-hmm.
But it's self-liquidating, so it's self-regulating.
Yeah. Shane Drinian has asked whether you think the world's natural resources are undervalued monetarily, and would the ecological tether fix that problem?
Oh, yes, they certainly are undervalued because money's official currencies aren't related to anything. They're mystic. They're a social construct. That's why we get market failure. That's the cause of market failure. That's what undervalues things. And what I'm suggesting is economic value is an artifact of modern societies, and what you're looking for is survival and well-being. And well-being doesn't necessarily involve in primitive societies. Economic value is irrelevant. It is having a natural resources which maintain your survival. So I hope that answers that question.
I think it does. There's been quite a lot of talk about sort of taxation as an alternative mechanism to solve the market failure. So tax carbon properly, and the price of using carbon rises. Where do you think lifeboat money improves on the idea of carbon taxation?
Well, it was answered in my presentation. Taxing it doesn't stop market failure. Market failure still goes on. What you're trying to do is compensate for the failure, but the escalator is still taking you down, and you're trying to run up it. And it's much better when you're poisoned by a snake. It's rather than cure it, it's better to kill the snake. So you've got to stop the market failure rather than compensate for it. So that's my answer to that one.
Okay. I just wondering about the whole question of sort of transnational value. You spoke about bioregions and managing the difference in value between bioregions. Does this become very much more complicated when we're talking about transnational activity?
No, it gets simplified because it's localized, and the people in the bioregions know what's good for them. And each bioregion has different characteristics, different endowments, there's different climates, there's different weathers, different renewable sources, and you can't manage complexity top down. You've got to manage complexity bottom up. And that's why if you use that tax deduction to convert corporations into endowment corporations, providing benefits for all stakeholders, they become agents operating globally, but on a local basis.
Mm-hmm.
And the ownership would then become localized. So transnational corporations will become locally owned and controlled over the life of a patent. There's no commercial reason investors get overpaid because they get perpetual property rights, and they all have time horizons. When I was working in New York as a financial analyst for a big multinational firm, they did projects out for cash flows out for 30 years, but no country in the world did they look longer than 10 years. So that means for 20 years, people are getting overpaid, but accountants can't report that overpayment, and so economists don't know about it. And Piketty doesn't understand why the growth rate in capital is some 10 or 20 times greater than the growth rate in output. And that answers it, because accountants can't report overpayments because the accounting doctrines don't require time horizons to be identified. So I hope that answers that one.
I think it does. I think it does. I guess the question is, do you, or where in the world do you see that some of these ideas are likely to be gathering traction? We've spoken about places in the world where experiments have been tried. But where, when you're talking to people, do you get most interest or most excitement?
Well, there's an association of concurrent currencies, and the answer is I can't answer that question because I don't have the knowledge. But there are activists all around the world experimenting with different alternative exchange things. Some of them let systems, and which don't, it's really sort of a barter sort of thing, and other systems. So I don't know how to answer that question. But if you Google search complementary currencies, you'll find the association of them, and that'll give you the answer.
Super. And just a question on, obviously to do this on any large scale would require parliamentary action, central bank action. What's in it for governments and central banks? Is there enough in this for them to make them take it seriously?
Very seriously, because they become extinct. We don't need central banks, as Governor King said. It's part of specialised form of central planning, and that's why you've got to get Parliament involved, because Treasury is sort of captive to the central banks, and we don't need central banks. They are the problem. They're creating the wrong sort of money. It's money not fit for purpose, and governments are creating markets which are not sustaining humanity. They're creating market failure. They don't have stability. You have US presidential tweets changing the value of international currencies. That's not a way to have a stable unit of account. They are the problem. And what I'm suggesting in my talk was that they create their own memorial by pioneering the introduction of a central bank digital currency in a lifeboat form, so you don't have government debts. It's self-liquidating, self-terminating, and transparent. 3T money.
We'll see whether there's a central bank out there who's willing to vote for its own demise. But I think that's why, as you say, it needs political leadership.
Or that's right. Central banks, I think, have censored discussion about tethers. And that's why I got Michael involved, getting that round table.
Absolutely. Well, Sean, thank you very much. We're coming to the end of time, and it's been a fascinating session. So thank you very much for that. I just want to finish by, first of all, thanking our sponsors again. We are, as I say, very fortunate to have people who support us in the work we do. We're very grateful for them. Thank you, obviously, to our audience today. Looking forward, if you are inspired to come to further events, we have a session on just tomorrow on the Achilles heel of AI, how a major tech risk to your business could be the one you haven't heard of. On Thursday, a session on are we asking the right questions about profit, and on Friday, why the UK-India relationship matters. So, a busy agenda coming up. Do keep an eye on our website for forthcoming events. So just to close off, my thanks to you, the audience, for your engagement and your attendance today. As I say, the recording will be available in around 24 hours, so do spread the word if you want. And a huge thanks to Dr. Shan Turnbull to challenge our thinking and make us think seriously about different ways of organizing the world of money. Thank you, Shan. It's been fascinating. And so I look forward to seeing you again. Thank you very much. And very much looking forward to meeting Shan again in the future. Thank you.
Thank you, Michael.